Ladies and gentlemen, good day and welcome to the Bajaj Consumer Care Limited Q4FY23 earnings conference call hosted by ICICI Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Karan Bhuvania from ICICI Securities Limited. Thank you, and over to you.
Thanks, sir. Good morning, everyone. It's our pleasure at ISEC to host Q4FY23 results conference call for Bajaj Consumer Care. From the management, we have Mr. Jaideep Nandi, Managing Director, Mr. Dilip Kumar Malu, CFO, and Mr. Richard D'Souza, OVP Finance. I would like to hand over the call to Mr. Jaideep Nandi for his opening remarks, post that which we can open for Q&A session. Thank you.
Thank you, Karan, for hosting this call. Good morning, everyone. I am pleased that all of you have joined this call, taken time out. Let me now take you through the performance of the company for the quarter and for the full year ended 31st March 2023 before we open the floor for the questions. Starting with the market, the overall hair oil market saw a marginal decline of 0.8% in terms of volume and a similar value decline compared to the previous quarter of the previous year, corresponding quarter of the previous year. Urban markets recovered to register a growth of 4.1% in volume and 3.7% in value, while rural markets are showing signs of recovery but still remain subdued with declines of 6.2% and 5.6% respectively for volume and value, which having improved from the previous quarters. Quarter 4 hair oil market trend is better than compared to the earlier quarters. Declines in premium categories like Ayurvedic and LHO has also reduced. On a long-term basis, at March 23, the gradual recovery is also visible with the market decline reducing, resulting in overall hair value decline of 2.8% and volume decline of 2.5%. The company reported quarterly standalone sales of 241 crores, resulting in a 11.7% value growth and a 9.9% volume growth as compared to the corresponding quarter of the previous year. For FY23, reported sales stood at 938.1 crores, delivering a growth of 8.4% in terms of value and 5.6% in terms of volume compared to the previous year. On a consolidated basis, revenues grew by 9.5% in FY23, with international business registering a strong growth of 56%. Gross margin for the quarter stood at 54%, which was lower by 210 basis points compared to the corresponding quarter of the previous year, mainly owing to commodity price inflation. Sequentially, however, over Q3 FY23, gross margins improved by 110 basis points with softening of key raw material costs in the recent past. For the 12 months ended, gross margins stood at 53.4%. LLP prices for the quarter was higher by 9% compared to the previous year, same period previous year. However, on a sequential basis, LLP prices were lower by 7% on account of benign demand scenario. RMO prices saw a decline of 22% compared to the previous year and on a sequential basis about 12% on account of good harvest crop and overall correction in the edible oil complex. While inflationary pressures have softened compared to the previous quarter on account of the easing in commodity prices, we see the same remaining range bound in the market. Our continuous focus on cost-saving measures through implementation of various initiatives has helped us bring in structural reduction in material cost and overheads. A&P spend for the quarter was at 17.2% of sales, with the absolute spend remaining at the same levels as compared to the corresponding quarter of the previous year, as well as to the previous sequential quarter as well. For FY23, A&P spend stood at 18.2% of sales, translating to an increase of 18.9% in absolute terms over the same period last year. The significant increase in A&P spends is in account of increased investments in NPDs and digital media, which is part of our long-term strategy of diversifying our portfolio beyond ADHO. EBITDA for the quarter was at 43.3 crores, which is a 12% growth in absolute terms over the same period last year. EBITDA margin for the quarter was at 17.9%, which is an increase of 280 basis points and 27% in absolute terms sequentially over quarter 3 FY23. PAT for the quarter was at 40.7 crores, and for the 12 months ended, EBITDA was at 146.2 crores and PAT at 140 crores. In Q4 FY23, general trade registered a growth of 6% year-on-year and around 7% on a sequential basis over quarter 3. The rural demand continues to remain subdued in quarter 4 FY23, though it has been showing signs of recovery. High teen growth in urban offset the decline in rural, resulting in overall 7% growth in general trade as mentioned. Urban initiatives of top city approach, both 10 lakh population and 5 lakh population, strengthening distribution reach in metros, top-end retail focus with investment in store visibility have now started bearing fruit. Wholesale loyalty programs in key urban markets with specific focus on entities have also worked very well. This has resulted in both retail as well as wholesale registering double-digit growths. Modern trade and e-commerce continue to report strong growth in quarter 4 as both channels continue to scale up well on a year-on-year as well as sequential basis. Significant market share gains have been made in key accounts both in modern trade as well as e-commerce. Modern trade grew by 51.4% in quarter 4 FY23 compared to the corresponding quarter of the previous year and now contributes to about 9% of our total sales. Modern trade business has scaled up 2.2x over the last 2 years. Increased investments in visibility, merchandising support, better on-ground execution have helped consistently scale up our business. In modern trade, we saw good sale happening in the Republic Sale Week, where we saw good footfalls in major modern trade chains. E-commerce business is scaling up well. It recorded a growth of 63% in quarter 4 FY23 compared to the previous year and more than doubled in FY23 over last year. E-commerce business now contributes to about 7% of our total sales. This channel has also been instrumental in scaling up our premium NPD portfolio in the year. Consolidated international business reported a robust growth of 151% in quarter 4 FY23 compared to the same period over the previous year. On a full year consolidated basis, international business has been scaling up well with a 56% top line growth compared to the previous year. New channel partners appointed in major countries in Middle East and Africa have started generating good results. Local manufacturing has commenced in Bangladesh in quarter 4, while manpower upgradation and distribution expansion in that country is under progress. The country reported good growth in quarter 4, albeit on a low base, and will remain a focused market for us in the coming years. New countries and product introductions have also led to strong growth in the rest of world geographies. During the quarter, ADHO registered a growth of 11.4% in value terms compared to the corresponding quarter of the previous year and also 10.4% sequentially over quarter 3. Continuous media support has been provided for ADHO across TV and digital. Kiara Advani, our latest brand ambassador for ADHO, has featured in a series of high-energy marketing campaigns and events. The social media activity towards the ADHO campaign, Daro Nahi, Dare Karo, registered over 1 crore views. The Aman campaign, Superfood for Super Hair, has been gaining momentum. Through community marketing, 24 lakh people were reached out in 180 online communities, with SOP registering an increase of from 17% to 23%. The new product sale doubled in FY23 to INR 113 crores and now contribute 12% of our overall sales. Considerable growth and distribution penetration has been witnessed in Almond Drop extensions, that is Almond Soap, Almond Plus Argan, as well as Serum with Oil, which has been encouraging. Almond Soap was supported through TV media as well as sampling to drive trials. Almond Argan and Almond Serum with Oil were available on all key e-commerce platforms and also got listed in select modern trade chains in quarter 4. The AD extensions were supported with off-platform digital activation to build awareness and on-platform spends to drive conversions. Our digital brands, Bajaj 100% Pure and Native Soul, continue to be supported with visibility on e-commerce platforms. Native Soul portfolio is now being consolidated with hero ingredient argan oil-based products in conditioner, shampoo, hair oils, and serum to ensure focused marketing spends. We remain committed to build our digital portfolio steadily in the premium personal care space. Our coconut portfolio continues to perform well. Consumer offtake and distribution built up over the year has been yielding results. Print media support was provided in select markets to build awareness. So coconut continues to do well, and the share of Amla portfolio remains steady in mid-single digits across all India level. As far as ESG is concerned, we continue to work on our ESG agenda and are driving our improvement in various areas of our operations. We continue to work towards reduction of carbon footprint and GHG emissions and strive to reduce its impact. Steps have been taken to reduce consumption of packing material per liter of oil sold by optimization and usage of specification. Initiatives have been taken at a plan to reduce energy consumption. The company has ensured that commitment as per the EPR are met. Water conservation and replenishment of water resources are key imperatives for our plants, and we have made significant progress in this direction. As far as our strategic pillars are concerned, we have made decent progress in most of the strategic pillars of growth in FY23. The increase of distribution in urban, including both retail initiatives and wholesale activation, as well as specific SAC group level interventions, have helped ADHO regaining momentum and restoring strong growth across all channels in Q4. Expansion of our hair oil portfolio has helped us to drive top line through coconut and amla portfolios. Almond Drops extension in hair and skincare categories are scaling up as per plan. They are being supported by visibility on digital, both on and off platform. Further launches in AD extensions are planned in a graded manner in FY24, as has been informed earlier. Our digital first brands continue to witness steady growth, and we will keep supporting them through digital media, as well as continue to make forays into the premium personal care space. The international business, which is also another focus area for the company, registered all-round strong growth in Middle East and Africa, Bangladesh and rest of the world, and this thrust will further be taken up in FY24. Moving ahead, summarizing, scaling up of our existing portfolio, new product launches along with focusing execution across channels will remain our key drivers for top-line growth in FY24. In addition, the company will continue to drive for premiumization of portfolio, rationalize cost structures, drive automation and digital transformation initiatives to deliver growth with healthy margins in the coming quarter. With this, I end the opening remarks and open the session for questions. Thank you.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Our first question comes from the line of Perch Patanki from IIFL. Please go ahead.
Hi, Percy here. Sir, just wanted to understand on the margin front. I mean, in the past calls, we have been a little sort of conservative and said that do not expect any significant margin expansion in the near term. But now our margins have gone from around 14.5 to about 17 plus. So just wanted to understand, are we confident of retaining high teen margins here on, or is this sort of a blip in the continuum?
See, I think, per se, we had continuously maintained that for this year we had taken a major investments both in terms of the new product scale up, in terms of marketing, as well as gross margins were specifically impacted because of the very steep LLP and RMO, which possibly our raw material basket was even worse affected than the overall market, other than maybe soap. And I think we had given a guidance that anyway we will be targeting 18 to 20% in the very near to mid-term kind of a number. So this is something that anyway we are committed to, because below 18% is something anyway we are never looking at. Yes, I agree that last year was a little bit of a difficult year in the first 3 quarters, but 18% is a kind of a bare minimum we are looking at, and we wanted to reach that 20% kind of a number by the midterm. So that is something that we remain committed to. Yeah.
And the ad spend that you have done this quarter, would you say that's a normal kind of number, or is there some phasing issue which has driven it lower, or you feel that this level of ad spend is sort of okay?
So if you look at the ad spend, the specific amount that we have spent, that's close to that 42 crore kind of a number. I mean, that is something that we would like to remain, and it has remained consistent across the years. So as a percentage, it falls as the top line goes up. But that is a number which is what we were looking at in terms of the SOV coverage we wanted for ADHO. The digital build-up that we have done in terms of now the digital part of our investment itself in ad spend is about 25%, slowly scaling up maybe towards 30%, and the ones that we spend on the new products. So this is something that we will roughly keep it at that level. So ad spends will not go down as an absolute number going forward. But as sales scale up, we feel that as a percentage it will go down. Yeah.
Right. And last question, how do I basically interpret or look at your growth? While on a YOY as well as sequential basis, the growth is very healthy. But if I look at the last normal Q4, which was Q4FY19, versus that, more or less, we are in the same range on a 4-year basis. So my question here is that once the base sort of normalizes, because this year on a YOY basis also our base was very favorable, right? Q4FY22 was a -10 kind of a number. So once our base stabilizes, how should we look at growth going ahead? Because the overall industry numbers are reviving, but they are still pretty lackluster. So what gives you confidence of maintaining this double-digit kind of top line?
See, 2-3 things. If you look at between, let's say, quarter 2, quarter 3, quarter 4, the progression that is happening, and that is exactly what we've been talking about, that the corrections that we are making are a little more mid to long term in nature, and you would not see short term results. That's what we have been talking in the last 2 years. And now some of the investments that we have made, both in terms of back end, in terms of automation, in terms of corrections, in terms of overall cost structures on one side, and in terms of investments in terms of our products marketing. And now slowly they are starting to bear fruit, whether it be the extensions, whether it our expansion in our oil portfolio, and maybe another range that will be coming out this year, which is something that we are contemplating, which is a little higher in gross margins. I mean, those are things now at least we have a back end which can support that. So I would like to think that in the last 2-3 years it was more consolidation and constructing the base for getting into this, and now slowly we are seeing results coming out of whatever we have been trying to do in the last 2 years.
And just couple of data points, if I might ask. Firstly, on the ADHO contribution to the overall sales for the quarter as well as for the year. And secondly, in terms of your direct distribution, what you have reached at the end of FY22, and how it has compared versus, let's say, a year or two ago.
If you look at the overall contribution of ADHO, that earlier, which was about 93%, is now down to about 86% in terms of overall saliency. And then the traditional range that we have, which is basically the other products, Nomarks, Cool Almond, Yasmin, Brahmi Amla, that is about 2%, and 12% comes out of your new product, new product block that we have created, which I'm including the Amla Aloe Vera, which was also a relaunch, so that gets included in this. So that today forms about 12%, and the direction that we have said is that this range needs to go to about 30% or so going forward. So overall ADHO saliency, we keep pushing for growth for ADHO, but we look at the overall saliency of ADHO coming down to about 60% or so, more long term, and in the near term maybe about 80% or so. So there we are on track as far as business is concerned. As far as the distribution is concerned, that number has gone up to about 8.5 lakhs where we have taken up the number, which directly we were covering about 6.5 lakhs through our direct coverage. Our van sales had increased the number to about 8.5 lakhs, which is where we are. In terms of quality of distribution, I think in retail the distribution expansion has been very good, especially urban, and I think the numbers are, while in in number terms, it is just about adding about 50,000 more, but in terms of the quality of distribution, it has been a very good quality of distribution that you have seen, and in spite, and that is bearing results from the fact that in spite of so much of difficult times as far as urban is concerned, you are seeing that retail growth has been consistently steady as far as we are concerned. We have been continuously reporting about 10.5% double-digit growth as far as retail is concerned.
Right, sir. That's all from me. Thanks and all the best.
Thank you.
Thank you. Our next question comes from the line of Tejas Shah from Avendus Spark. Please go ahead.
Hi, sir. Thanks for the opportunity and congrats on good set of numbers in this environment. Sir, just first question pertains to margin guidance that you said that the near-term goal will be to kind of revert back to 20% kind of margins. So just wanted to know, in macro environment, there's a lot of volatility both on growth and on margins front and raw material front. So this 20% is assuming normalcy coming back, or irrespective of that, you believe just raw material tailwind is in our favor, we should be able to do that?
We are looking at, as of now, your LLP and RMO looks range bound. So I don't think there is a major bearish trend on either of these products at this stage. So we are looking at raw material prices as a scenario. We are looking at a 17 to 20% kind of EBITDA margin, which is what we are targeting. Now, 20% is not near term. 20% is more mid term. A little more corrections are being done as far as our cost structures are concerned. Beyond gross margins, some more cost structure optimization. We feel that there is an opportunity. We are looking at that, and that's where we say that at a 20% is what we wanted to reach in the more on a mid-term basis, more like 17, 18, and going forward that kind of numbers for the near term.
Sure. And sir, so the structural correction that we wanted to do in the business model, which was dependency or over dependency on one product and one brand. Do you believe that with this kind of margin range, we can continue in that journey and still now there won't be further deceleration or contraction in margin if we want to achieve this goal as well in terms of diversification?
Just to give you some insight on numbers, as we crunch our numbers, we see that because of our entire change in portfolio, the margin dilution has been overall impacted by about a percentage point. That's about the impact that has happened. And most of the impact has happened because of the raw material price inflation and our inability in the industry to take price increases. We see that in similar situation, the soap industry were able to take price increases. Somehow in our industry, the companies herein, because of the growth, they have not been able to take the kind of price increases. So our inability to pass on the price is where the gross margins got impacted. I think both of them normalizing as the demand scenario you see are improving. We should see some bit of price corrections from our side as well going forward. In terms of passing on the price increases that has happened in the past to the consumers. So this is something that you will see. This is one side of it. The other side, as a company, we have also taken a decision that products that we launch should only be launched at gross margins which are closer to ADHO. So I mean, there might be marketing spends that we will be doing on these products, but gross margin products, we are going to have a no kind of a situation for any product which has got gross margins, let's say below 40-45% kind of a number. So this is something that we are going to strictly adhere to going forward.
Sure. So, sir, margin is very much clear. Just last one on the growth, not guidance, but just a very subjective outlook, if you can share. After all the correction that you have done in the business model and looking at macro environment, where do you see our sustainable growth rate kind of stabilizing? Will it be mid-teens or low teens or high single digit? Where do you want this business model to now gravitate towards?
See, for the next 5 years, anyway, you will have to look at, as a company, we'll have to look at a sustainable double-digit kind of a growth rate. I mean, preferably quarter-on-quarter, but at least year-on-year for sure. So certain key corrections that were required, we have been in that journey for. So one is our presence in urban itself was poor in terms of retail presence was not very strong. So that is something that has been continuously getting dialed up. So we have seen progress in that. In terms of deep rural, some work had happened. I think further work is required as far as deep rural is concerned. At this moment, we are not spending too much money in rural because we want the rural to recover completely and then maybe especially target that. But we do have some plans on that. The third is again back to geography. There are certain clear geographical gaps that we have, and now we have some understanding where we can go and what we can do in this geography. So some action points are being triggered as far as some focus geographies are concerned that we should see coming up in the quarter. I don't want to talk of it because we want to get into that. So as far as that part, what we envisaged maybe 2-3 years back, slowly at least we see some action happening. As far as the product portfolio is concerned, so we clearly wanted to be on one side complete as far as the hair oils portfolio is concerned. On the second side, get our credibility slowly getting established in the personal care space, both in hair and skin care in the more on the premium range. So our journey has just begun. I would not say is anywhere begun in a big thrust, but at least clearly directions are there and some more product launches in that direction, consolidation, our entire media approach, etc. You will see that open up as we go forward. And that is something that we have been talking of earlier. A third range of products which we are saying that there is clearly an opportunity for Bajaj to get in this space itself. There is an opportunity for us. It's something that we are looking at actively, and we should see some progress in that in the next 1 or 2 quarters also. So this is as far as the domestic market is concerned. International, we were already, it was clearly a low-hanging fruit, but obviously a lot of groundwork was required in that. And I've been saying that in the previous calls that I would not want to talk of international, but this is clearly a thrust area. This year we have had a modest 55%, 56% growth. Decent bases are getting created, but now at least we have a team that is working. Specific country teams have been worked upon. So a few countries are clear focus areas, and we see international being one of our key drivers also in the next few years.
Very clear, sir. And sir, if I may squeeze in one bookkeeping question, how should we budget for tax rate for FY24 and 25?
Tax rate for FY24-25 should be the same. Yeah. Because the listing goes up in 27. We go to continue in that. Yeah, that's right.
Okay. Thanks a lot, sir, and all the best to the team for coming quarters.
Thanks.
Thank you. Our next question comes from the line of Shirish Pardeshi from Centrum Broking. Please go ahead.
Hi, good morning, Jaideep and team. Thanks for the opportunity. 3 questions from my side. If I look back over 5-6 quarters, HSM market has been our pain point. And now the growth, what you mentioned, 9% or the volume growth in ADHO is very strong. Could you talk something about how the scale-up or the offtake or the demand situation over last 2-3 months you are experiencing in the HSM market, and spend a minute or so on the wholesale, because you mentioned in the beginning that you have run some wholesale loyalty program. So what is it that it is for a short term, it's a long term, or are you tying up with the volume or value?
So, okay, so 2-3 questions, I'll answer them in that order. So, first thing is in terms of HSM markets, unfortunately, HSM markets still are not completely recovered. Their recovery is still a little slower. I mean, we are looking at some of the food companies where the HSM markets are doing well. In our case, unfortunately, personal care, they still remain a little subdued. And we look at the numbers, especially we typically look at numbers for UP because that's a decent benchmark for us. And we look at both in terms of soap, shampoo. While shampoos have recovered a bit, soaps, etc., still down in terms of volume. Hair oils actually are performing better than soaps in terms of volume terms. Obviously, value terms, soaps are still double digits because of the price increase they have taken. So this is clearly still a pain point. But again, as I said, from quarter 3 to quarter 4, as I look sequentially, the improvement is clearly there. So there were high mid-teen declines that are happening in markets like UP. Now it has become single digit or just about low double digit to single digit kind of a decline. So this clearly we are seeing slowly coming back, and going forward we are very powerful. Where the growth have come from, as I said, we were clear that we need to make ourselves both a little ADHO independent as well as a little HSM independent. So I think in that strategy, good work has happened. One is obviously modern trade and e-commerce has done a fantastic job for us to helping us put us back on line. But clearly GT needs to perform, and in GT there have been other markets beyond the HSM markets which are now slowly showing traction. At this moment, again, as I said, nothing huge, but clearly in the direction that we would want to go to. So qualitatively, that's a pretty good direction that we have reached. So this is as far as the markets are concerned. As far as questions about the retail and wholesale is concerned, retail, as you are aware, I mean, we have talked about retail has to be one of our focus areas, and that's where we see our new products, etc. For a lot of strategic value, retail would be useful for us, and retail we had anyway not a very strong presence. So that a lot of work has happened in terms of activation, in terms of working with customers out there, etc. As far as wholesale is concerned, it is more loyalty programs of more long-term in nature. There is no short-term. We have completely come out of this short-term approach where there will be top-ups given at the month end, etc. We have completely closed that because that is something that we have talked about a year and a half back, and that's why we have taken some kind of a beating also from the market. So, and if you were to go to the market today, in terms of market dynamics, as far as the almond drops is concerned, the prices of almond drops across the country remain very similar. There is very cross-border inflows, etc. So we had taken that pain in the last 2-3 quarters. We are clearly seeing that advantage coming. So that comfort and confidence of the wholesalers are also back, and we have now tied them for long term with volume numbers, so that these are the numbers they have to look at. So this is more creating as far as the wholesale loyalty. Yeah.
So one follow-up here, Jaideep. What is the F23 wholesale contribution you have settled in urban and rural?
So it's again, we have come back to that very standard listing of 25, 50 kind of a number on a very, very this thing. The retail is now at 25, which used to be 20, 30, 50 kind of a mix. So retail is now 25, wholesale is now about 25 or similar plus minus there, and wholesale is about, and rural is about 50. Actually, rural is a little lower. Last year, rural was 52% and urban was 48. This year it's been the other way around. Urban is 52, rural is 48% overall.
Okay. My second and last question on the NPD. You said aspirationally you are looking for a contribution to move from 12-13% to 30%. What time frame and what are the initiatives would take you there over next whatever time frame you are expiring?
So again, this is something that we have not. In fact, if you look at any of the initiatives, all of them remain exactly the same that we had stated 2 years back. I think none of them we have changed in terms of directionally what we wanted to do. So in terms of new products, as I said, first and foremost, we wanted to complete our hair oils portfolio. We are still not there. We have introduced 4 products, which is 2 in Amla range and 2 in the coconut range, but we are still not there because there is something a little more ground to cover. When and how we'll cover is something that we'll continue to look at. We felt that almond drop extension, clearly there is scope for us. The 3 products that have launched are showing good signs, taking traction in new categories which were not there. And now this year we see another set of launches that will happen, which will keep expanding our almond drops umbrella, which is again something that we have stated. The third we have said is that we'll be looking at a range of products where Bajaj's relevance can be used, which is basically the trust of Bajaj, the Indianness of Bajaj, and the distribution strength of Bajaj, which is basically again GT centric. Because finally, if you have to make money, it has to be a little more GT centric product. So that's a range of products will be coming up, and products where, as I said, gross margins. The two key things that we look at: gross margins and basically the competitiveness. Now that is there in the market. So we have identified a set of categories where we can go in where Bajaj is relevance. We have done our consumer testing accordingly, just like we have done for our almond drops extensions, and we see that is a range, and that is a range which will also be coming out this year. So with this overall push, I think, and basically on-ground execution, which is finally at the end of it the final answer, which is slowly now improving in the kinds of quality of people that we have been changing across in the GT overall, our approach to GT, etc. I think we are pretty confident that we are on track to go in that direction. Yeah.
So one follow-up here. You said 30%, which is really happening, and it is 2.5 times what you are currently holding. So question here is that are you banking on the distribution scale-up and strength, or you are really saying that the consumer proof test is done and more channels we will open and that will drive the growth?
In fact, it will be a combination of both. As I said, distribution scale-up, clearly certain geographies where every geography we have distribution opportunities, but certain geographies more so. And now that relevant products are slowly coming in, and we think some more relevant products specific to geographies we might introduce, we feel that distribution expansion clearly will be one of the big pillars for that. Other than that, obviously the channel statements that you made will obviously hold true as well. So both in terms of channel relevant products as well as distribution expansion in a little unexplored geographies as well as in existing geographies where we see expansion happening.
Okay. Thank you, Jaideep and team, and all the best to you.
Thanks.
Thank you. Our next question comes from the line of Kaustav Bubna from BMSPL. Please go ahead.
Yeah, hi. So I had a few questions. Can you hear me?
Yeah.
Great. So the first question was really on the ADHO market. We're speaking about new product development, and that's excellent. But on this ADHO market, could you just give me your sense on how you see this market shaping up in terms of volume growth over the next 3 to 5 years? Where do you see the industry in terms of market size versus today?
As I said, hair oil industry is neither going to really slump big time, nor is it going to expect a big growth, etc. Yes, this year has seen a blip in terms of the hair oil industry because in discretionary we have been one of the worst affected. But I think going forward, a reasonable expectation of a 3 to 5% growth as far as volume is concerned would be expected. Is a reasonable expectation to have as far as the hair oil industry is. That's a let's say an estimate we operate with. Obviously.
No, but my question is more on the almond side versus the overall hair oil.
I'm coming to that. You wanted overall hair oil as well, so I'm just taking the hair oil part first. Okay. So that 3 to 5% is what we expect. Within that, almond, it's also a question of how we place almond. Almond being one of the leaders, what is the aspirational value you put to almond and what kind of product? So rather than just say how much almond will grow, I would rather say how much will the premium oil segment will grow, that Ayurvedic, LHO, that block. And I think that there is enough proof in the marketplace that if there is enough aspirational value that can be put to the brand in terms of what you are offering, in terms of the requirements of the product, those brands also have the capability to grow. And as the market situation improves, as demand conditions improve in terms of economy, you will see those markets, categories also bounce back pretty strongly. As we have already started seeing, last 3-4 quarters, 5-6 quarters, these ranges were the worst affected. Now they are clearly showing signs of recovery, and we expect that if the market were to have the 3 to 5% growth, there is no reason to believe that almond and its ilk will have a growth which is less than that.
Okay, so that's great. So basically, when we look at over the next 2 years, when we look at NPD going up to 30% of the total portfolio, that shouldn't mean that our ADHO falls, right?
May not be 2 years.
ADHO will continue growing too, right? Sorry?
May not be 2 years when that 30% is achieved. So you that 30% expectation of NPD in 2 years may not happen organically.
Okay, and the next question is RMO and LLP prices have cooled off from highs. So what is our inventory holding period for these raw materials, and when will the reduction of prices start showing more meaningfully in our margins?
So typically we hold about 20 days of inventory. So yes, there will be some flow that will happen in Q1 as well. Yeah.
Okay, and any guidance for NPD revenue growth in FY24?
No, there's no guidance.
And could you just give us an update on the buyback? What's happening? Sorry for I'm just misinformed there. Could you just...
Absolutely fair question. So buyback, we had taken a book size of 80.89 crores as far as buyback is concerned. We ended up buying back 80.88 crores of stocks, which was equity worth, number of shares was 14.26 lakhs, which we have subsequently extinguished. 49.14 lakhs, which we have subsequently extinguished, and now we have a equity base of 14.26 crores. From 14.75, it has gone down to 14.26 crores. So this is what the buyback status is. And just to get a sense of the promoter holding, it has gone up from 38% to now about 39.35%.
Okay, great. Thank you so much for your time.
Thank you. Our next question comes from the line of Anuj Jain from Globe Capital. Please go ahead.
Hi, sir. Congratulations on the wonderful set of numbers. Just a couple of questions from my side. First one is, what kind of ad spend we are looking for this financial year?
So as I said, in absolute terms, we'll strive to ensure that the numbers remain similar. So you might see a little bit on a percentage drop. If the sales go as per plan, then you might see a little bit percentage here and there as far as a percentage.
Okay, ranging between 16 to 18%. I can take.
Absolute terms, we would like to keep it in a similar range.
Got it. And my second question is, for this Q1, we have now in the second month, right? So how's the rural recovery shaping up, for the month of April? Till Q4, you have given all the pictures. So just wanted to understand for the month of April, how the rural recovery has been shaping up, as well as the RM and LLP prices. What kind of trend we are looking for, post Q4, for the month of April and still.
Let me cut this short quickly, so no guidance on April. But rural economy is going, the trend that you are following both in terms of rural economy, the commentary that I made remains very similar as far as this quarter as of now we see. But in terms of guidance, I won't be able to guide you as far as how it will.
No, I'm not asking for guidance. What kind of recovery you are looking at by looking at the numbers and the LLP prices and RM prices for the month of April, how they are shaping up?
As far as rural is concerned, as I said, we are seeing that gradual recovery slowly happening, but yet not recovered in the way that we would like to have happen. And LLP, at a point of time, it has really gone down. It has now become a little range bound. It has more or less steady. So again, the commentary that you saw in Q4, which is that IMO prices has come to a pretty decent price in terms of a lower price. That is where it has remained. And LLP has also more or less stabilized at the prices that we ended Q4 at. So it has remained more or less range bound. We have not seen in further either increase or decrease from where we saw it.
Got it. Thank you, sir. That's it from my side. And all the best.
I'll qualify it by saying it remains range bound. So it is no indication of water because the market still remains volatile as far as LLP is concerned. So we'll have to keep watching the space to see how it is.
Got it. Agreed. Thanks.
Thank you.
Thank you. Our next question comes from the line of Varun Bang from Bryanston Investment. Please go ahead.
Hello. Congrats on good set of numbers. What we see is we have a long range of offerings on both Native Soul and Bajaj 100% Pure side. Do you don't see the need to narrow down focus in terms of range of offerings on both these brands?
Good question, Varun. In fact, if you heard the commentary in my opening remarks, I actually touched upon that point. You are absolutely correct. So that was our first year of this thing, and our learnings are also being now slowly put back into effect in terms of what we wanted to do. So one of the we feel that maybe we went a little too overboard in terms of number of hero ingredients we wanted to establish in the mind of consumers as far as Native Soul is concerned. So that now we are now spending our entire this thing to take on argan as a product to support Native Soul with the entire range of offering in shampoos, conditioners, hair oil, everywhere. So that is where we will focus, argan being our hero ingredient, so that people can relate Native Soul with argan oil and argan being the supporting. So that is what we are trying to rationalize Native Soul as. While you will have the other products, but this will be the main focus in terms of marketing, digital, etc. As far as pure oils are concerned, there are only 5 that we have on the offering, and that is something that we don't need to scale down, because that is something that we are seeing good traction. 1 or 2 of them have not been doing as well as the others, and that we will keep rationalizing based on. So nothing to rationalize the products. It's basically the marketing investments which is proportionate to the sale that we have. So the products like castor olive, etc., are giving better responses. So we will be investing more on those rather than products.
Okay. So from here on, how are you prioritizing investments between variety of brands that we have? If you can just share your thoughts around that. I mean, percentage mix between ADHO and non-ADHO, and within non-ADHO, Native Soul and Bajaj 100% pure, if you can just share.
So basically, what we are trying to do is, as we said, 2 things that we are continuously going to scale up. So in terms of ADHO, the non-ADHO part of the investment in terms of marketing spend, we are slowly and gradually creeping up, and the digital part of the versus the conventional media, that is slowly we are scaling up in both. So that is a mixed change that is happening. And as you see now, ADHO is about, if you look at the quarter, ADHO now contributes to about 2/3 of the investment, or rather more like 60% of the investment is now on ADHO as far as digital is concerned, where about 40% of our investment happens in the NPDs. In fact, of a full year, if you look at it, nearly getting closer, ADHO and NPDs. While if you look at the overall, this thing obviously is still heavily onto, just the TVC, if you look at it, is heavily still ADHO based. So that's how.
Okay, thank you.
Thank you. Our next question comes from the line of Abhijit Kundu from Antique Stock Broking. Please go ahead.
Yeah, thanks for the opportunity. My question was on almond oil portfolio.
Abhijit, you are not clearly audible, so can you speak a little closer to the mic?
Sure. Now am I audible? Or?
Yes, better.
Yes. Yeah. So, on the ADHO portfolio, product, you have shown about 9% volume growth in the quarter. So, when we look at the overall hair oil growth, it's still, muted, and whereas 9% volume growth is very strong in that case. And you must have gained market share. And I believe a major part of that market, that outperformance is because you have improved your presence in the urban markets. So, if I have to do my numbers, and try to extrapolate this for the next year of 8-9% volume growth, what gives you, what should give us the confidence of this repeating this 8-9% growth? Because, yeah, on a 4-year CAGR, it is flat, all of that is fine. But at the same time, after going down, coming back, reviving to this level also is pretty commendable. So, to continue from to grow over Q4FY23 and at this rate, what is the level of confidence you have? And how would be that driven? Rural, we still don't have that clarity, how much time it will take to improve. But urban, at least we have seen that. But urban also has outperformed. So there are reasons for it. And those reasons should continue, I believe.
Yeah, fair enough. If I have understood you correctly, that what is the confidence of, your voice was breaking, so I'm just trying to summarize what I understood.
Yeah.
So basically you're asking of what is the confidence of this kind of a growth coming back, and having come back from down, that's good enough. So that is the range, and what is the confidence that this track will continue? So that's a fair question.
Right.
Let me try and answer that again. So if you look at the last 2-3 years, exactly the same thing that we have been doing over and over. If you were to ask me what specifically did we do in Q4 versus the previous quarter, I would say nothing. I mean, nothing was done in Q4 which was different from Q2 or Q3, etc. I think, as we said, that as we were to build up our organization, as we are making a shift happen, it will slowly happen and then it will start getting momentum. And I understand that initial years were difficult years for all of you to take on, but that is something that anyway will happen as you make a transformation, and we are still in that journey. But some of the let's say levers that we are pushing, or some of the initiatives that we are taking, are now slowly starting to bear fruit. Let's say this entire talk of retail that we have been talking about, that double-digit growth, etc. Now it's catching momentum, and we see results of it coming in. All the corrections that we are making in GT in terms of dynamics, price dynamics, etc. These are now bearing fruit. In terms of expansion into geographies that we were not strongly present, slowly work has started happening. I would still not say that the journey is anywhere close to completion. It's just about started, but at least we are seeing momentum in that. In terms of the new products that we wanted to launch, we'll get in, where the investments initially was much higher than the results that we are getting in. So the marketing expenses are equal to the sales or even more. So those are now slowly trying to input. So I would rather say that most of the steps that we have taken were in the direction where we wanted some long-term results, or rather mid to long-term results, and now slowly we are starting seeing results of it. So I would think the team, and the biggest thing is the team itself is now a far stronger team that you would have than maybe, whether be it, and it is not only in sales and marketing. In my view, is the entire back end also needs to be equally strong, whether be it IT, whether be it your manufacturing, supply chain, etc. I think a lot of this credit also would go to that team. Obviously, the marketing and sales team will be in the forefront, but they have now become far stronger than this organization had ever seen. So I would think more or less the basics are in place now to see this company go in a particular direction.
Okay. So basically, Q4 is not a flash in the pan. There is, a steady at least 7-8% volume growth should be possible.
I cannot, as I said, I
cannot. You can give a guidance. Yeah.
Volume growth, what it will be there, but I am saying that the initiatives that we have triggered off are slowly now starting to bear fruit, is how I would like to put it.
Okay, that's it from my side. Thanks.
Thank you.
Thank you. Ladies and gentlemen, we request you to restrict to one question and one follow-up question. Our next question comes from the line of Gaurav Gandhi from Glorytail Capital Management. Please go ahead.
Hi, sir. Congratulations on the good set of numbers. As most of my questions are already answered, I just have one question. So what are your thoughts about competitive intensity in the market and our efforts in the modern retail category to highlight our products? Because if we see, बहुत सारे products जो है हमारा almond hair drop oil जो है, उसके अलावा सेम बॉटल्स में या सेम कलर या सब चीजें करके दूसरे भी कॉम्पिटिटर्स मार्केट में आ रहे हैं, तो हमारा प्रोडक्ट मॉडर्न रिटेल में हाईलाइट होने के लिए हमारा क्या एफर्ट्स है और कंपटीशन के बारे में आपका क्या कहना है?
बिल्कुल सही बोला आपने. देखिए, एज ए कंपनी कंपटीशन तो हम कंट्रोल नहीं कर सकते, सो वी डोंट ऑपरेट ऑन हाउ द कंपटीशन. ऑब्वियसली वी आर अवेयर कि कंपटीशन करता क्या है और उसके हमें मैंने खबर रखते हैं, नजर रखते हैं, लेकिन कुछ चीज़ों में हम डिसाइड करके रहे हैं कि कहीं पे यदि बहुत कुछ स्ट्रक्चरल चेंजेस किया हुआ है तो हम उसको अपना प्रोडक्ट के मुद्दे से हम उसको मैंने सपोर्ट करते हैं, रादर देन गो एंड रिएक्ट टू कंपटीशन. सो हम reacting to competition, especially on flagship brand, is clearly not a path forward for us. And we have seen that competitive intensity on almond from others even earlier. ये कोई नई चीज नहीं है. At least मेरे आने के बाद से 3.5 साल से तो देख ही रहा हूँ. I am sure before that also it was there. And I think in the places where you see this competitive intensity, those are the places where almond has also grown very well. So I would like to leave it at that. In fact, we are taking a step on the other direction where we have said that just for value volume growth के लिए जहाँ पे margins नहीं है वहाँ पे हम जाएंगे नहीं. So one of the classic cases in this year that we had decided, which will now come back because we have been able to get some structural corrections and LLP prices have also improved, is your आंवला का 10 और 20 रुपया पैक. 10 रुपया 20 रुपया पैक is clearly a very low margin range which we were there earlier. We had decided structurally हम इसमें करेंगे. मार्केट में जो भी होने दो, और इसमें यदि थोड़ा सा डिस्ट्रीब्यूशन हमारा जो पेनिट्रेशन हुआ था वो थोड़ा सा गिर भी जाए तो हमें मंजूर है, लेकिन वी डोंट वांट टू गेट इनटू वेयर यू डोंट मेक एनी मनी. इनफैक्ट यू विल बी गोइंग एट नियरली 0 ग्रॉस मार्जिन टू 5% ग्रॉस.
और सर ये मॉडर्न रिटेल में बहुत सारे प्रोडक्ट्स हाईलाइट किए जाते हैं जब हम एंटर करते हैं तब, तो उसका जब किसी ऐसे शॉप में हम हमारा प्रोडक्ट जब हाईलाइट करते हैं तो उससे सेल्स पर कुछ ज्यादा इम्पैक्ट होता है, मतलब सेल्स उससे बढ़ता है. इज इट इफेक्टिव सेल्स बढ़ने के लिए?
बिल्कुल बढ़ता है. और हमारी कुछ प्रोडक्ट्स आप देखोगे जो यहाँ पे हम इसको हाईलाइट किए हैं, सम न्यू प्रोडक्ट्स ऑल्सो. लेकिन हम एक चीज हम बिल्कुल इंश्योर करते हैं कि हमारा एबिटा जो वो डबल डिजिट तक क्रॉस ही कर जाए, कम से कम इतना तो रहे. सो दैट इज व्हाट वी इंश्योर. सो सम ऑफ द प्रोडक्ट्स दैट यू हैव सीन वेयर इन मॉडर्न ट्रेड वी हैव हाईलाइटेड, हमने हाईलाइट करके उसका सेल बिल्कुल बढ़ा दिया है. लेकिन हम एक चीज हम बिल्कुल ध्यान रखते हैं कि somehow we have to ensure that the profitability of the product so we are ensured, and even in modern trade.
और सर लास्ट ईयर आलमंड ड्रॉप सोप जो हमने लॉन्च किया है उसका रिस्पांस कैसा है अभी मार्केट में? सेल्स रिस्पांस कैसा आ रहा है उसको?
देखिए, हम पहले से ही उसको बता चुके हैं कि दिस इज वन ऑफ द लार्जेस्ट कैटेगरी, सबसे क्लटर्ड कैटेगरी है. तो इसमें प्रोडक्ट्स एस्टेब्लिश करने में कोई इमीडिएट मैजिक तो होने वाला है नहीं. लेकिन हमारा जो प्रोग्रेस हो रही है, धीरे धीरे जो डिस्ट्रीब्यूशन बढ़ रही है, धीरे धीरे जो रिपीट ऑर्डर्स आ रही हैं, इसमें वी आर वेरी वेरी कॉन्फिडेंट दैट वी हैव एक्चुअली कम इनटू द राइट रेंज ऑफ प्रोडक्ट्स. एंड एज आई सेड, आलमंड ड्रॉप सोप इज नॉट अ सोप इन आइसोलेशन. इट वाज नॉट अ सोप लॉन्च. इट वाज मोर अ आलमंड ड्रॉप से स्किन केयर कैटेगरी में दिस थिंग. एंड दिस ईयर यू see more of the range of products that will come in almond drops in skincare as well. So you will see that almond drops का portfolio बनते जाएगा धीरे धीरे, and the next 2-3 years में then you will have a full basket portfolio, a comprehensive portfolio रहेगा almond drops का, जिसमें हमारा advertisement भी help होगा, because almond drops को super food for अभी hair बोल रहे हैं, उसको almond drops super food for the body, और मतलब wherever we will take that direction, I don't want to get into it. So that's what our thing will go into. So that's the
satisfied, sir. Thank you.
Thank you. Our next question comes from the line of Nikhil from Simple. Please go ahead.
Yeah, hi. Good afternoon. I hope I'm audible.
Yes, you are.
Yeah, just a question. One is a clarification. You mentioned at the beginning of the call that the almond category as a part of the total business will come to 60 or 70%. That will involve all the line extensions and all the combinations of almond which we are launching, or they are outside of this?
Almond drops. Sorry, just almond drops. Almond drop hair oil, ADHO.
Okay. Second, sir, on e-commerce, if I add 2-3 data points, one is like if we look at our new products, which is now close to 100 crores, and the e-commerce business grew 100% from 35 crores to probably approx 70 crores. Now, if I have to understand the traction, there are two things which you have mentioned in the slide. One is the digital only brands and also the listing of the existing brands on the digital medium. So, is it like on the e-commerce, the higher growth which we have seen is from the digital only brands, or is it more traction from the digital listing of the existing brands which has grown, which has given us this growth?